Hey everyone, it's Rana, also known as Mr.NoBody. I'm excited to be here to share some top 10 market insights and analytical ideas with you this week. Next week, Mr.NoBody will be back to share more market tips, and we'll keep this rotation going. I want to make sure that everyone feels welcome here, regardless of gender. It's important to me that we have a diverse community of viewers. My husband and I have been working together to create content and analyze markets since the start of this channel, and we're committed to continuing that collaboration. I hope to bring some valuable insights to the table and contribute positively to this space. I believe that based on the current market structure data, there are two possible analysis ideas to consider for the dollar index, DXY. The first idea of analysis suggests that wave A is an impulse pattern and wave B is similar to a multiple zigzag due to acceleration. In a zigzag pattern, wave C may be an ending diagonal. A pullback is expected to form, which could be any correction pattern, such as a simple or multiple zigzag. It is important to note that waves 1 and 3, labeled as an impulse pattern, can also be classified as a triple zigzag. The second analysis idea suggests a continuation of the bullish market. This is because wave B has not been completed in the higher degree of the wave, which could potentially form a large zigzag pattern. Taking a closer look at the 4-hour chart, wave C, which is almost equal to wave A, was followed by a price action in the bullish market. A pullback may now be formed, which could be any kind of correction pattern. It should not go beyond the beginning of this price action and should end within the mentioned range. After that, the price is expected to see growth towards the first and second specified targets. The initial wave of the Nasdaq 100 has extended, while the third wave has increased by 61.8% from the first wave to 78.6% by the end of the fifth wave. In addition, the second wave formed a larger zigzag pattern that ended near the second wave from the first wave. These two key points confirm the diagnosis of the first broad wave. As the third wave continues, it has expanded and reached its original target. It may continue to expand until it matches the first wave in terms of time and volume. These targets were calculated on a logarithmic chart. Now let's take a closer look at the third wave in a 4-hour time frame on the chart. I will label and provide the necessary explanations. To confirm progress in a bullish market, it is important to see price actions such as the 1 and 2 and 1 and 2 patterns or the leading diagonal pattern, both of which look likely. Also, consider a price that invalidates the analysis. In a bear market, please remember that even though the fourth wave was a simple zigzag, another zigzag pattern may form after the market peaks again, creating a sideways pattern. In the stock market, the S&P 500 typically shows more progress compared to the Nasdaq 100. The first and third waves have equal volume, with the second wave being larger and forming a triple zigzag pattern. This pattern is superficially between 38.2% and 50% Fibonacci retracement. The similarity to Nasdaq is quite evident. There are two potential scenarios for the bull market to expand. The first scenario consists of patterns 1 and 2, and 1 and 2, which leads to the development of the third wave. On the other hand, a diagonal leading pattern can also form. Regardless of the pattern, breaking the previous peak is very important to extend the trend and achieve the stated goals. Pay attention to the price of invalidating this analytical idea. The Dow Jones market, predicted by Ralph Nelson Elliott, provides evidence of the validity of his theory. After the completion of 8 waves that make up a cycle, it is expected that the trend will advance in the overall market direction. This is particularly surprising. Let's examine the 4-hour chart of the third wave in more detail. It is generally assumed that the first and third waves are of equal length. The second and fourth waves typically alternate, with a sharp second wave followed by a sideways correction in the fourth wave, although there can be exceptions. I have been considering a bullish scenario based on the current price exhibiting an extended diagonal pattern. However, the question remains whether this is a leading or ending diagonal. The almost equal size of the first and third waves suggests a possibility of the fifth wave expanding, but it may also be limited to the same size and enter a larger correction pattern. For now, the focus is on the bullish scenario for extending the previous peak in the bull market. The market price has broken through and only requires a corrective pattern within the defined range, along with price action exhibiting an impulse pattern. I have been analyzing the Brent oil market and I'm trying to determine if the second wave has been completed. There are two possible scenarios to consider. First scenario, I see wave A as a leading diagonal, which could lead to the formation of a zigzag pattern to complete the second wave. It's worth noting that wave A could also be labeled as a triple zigzag. After wave A, in the bigger wave degree, there is a 3-wave pattern up and then a 3-wave pattern down. This is expected to create a lateral pattern, such as an expanded flat or running, with wave C as an impulse pattern. Alternatively, it could be a diagonal pattern that completes wave B to a bigger degree. Second scenario, waves 1 and 3 have almost equal volume, which could cause a shortening of the fifth wave. The second wave is a triple zigzag, forming the W wave, and the X wave is a simple zigzag pattern. It's also possible that the Y wave is a triple zigzag and reaches the first target before reversing to start the third wave. Now, let's examine the 4-hour chart to consider the first scenario for a sideways pattern. we have observed 3 upward waves, forming a simple zigzag pattern for wave A. Wave B is also a double zigzag. Currently, we expect to see a flat pattern, sideways price action, or an impulse or diagonal reaching any of the objectives in the direction of extension, which requires the formation of a correction pattern. Let's analyze the natural gas chart. We can observe the third wave expanding from the first wave to a greater degree, which has already occurred, and the first wave to a greater degree, which has been completed. The second wave, in a larger degree, appears to have formed a zigzag pattern, and it has been completed. It's important to note that the second wave should not surpass the starting point of the first wave. I plan to zoom in on the time frame to examine more details. First, I will provide an overview and then delve into the specifics. The first wave, to a larger degree, resembles a classic impulse wave, while the deeply corrected second wave is labeled as a triple zigzag. The significant aspect here is that due to the depth of the second wave, we might see the emergence of a leading diagonal pattern or a 1 and 2 and 1 and 2 pattern. Following the previous market price peak, a correction pattern may form and develop rapidly. However, it's essential for any type of corrective pattern to conclude within the mentioned range, and the price action should reach the specified targets. This will help to complete the puzzle pieces and enable a more accurate diagnosis in the future. Let's analyze the metal and gold market. It appears that we are approaching the end of the third wave rally in the larger degree of the gold wave. There is likely one more wave left in the bull market, and we anticipate a correction pattern to form in the larger degree of the wave. Since the second wave was a double zigzag, it's possible that a sideways pattern was formed. For a more detailed investigation, let's switch to a 4-hour analysis. For a more detailed investigation, let's switch to a 4-hour analysis. We consider the first wave as a diagonal leading pattern, the second wave as a sideways pattern, and the third wave as shorter than the first wave. The trend is expected to continue until it completes the fifth wave of the same degree. It's important to note that the fourth wave may become more complex, but it should not enter the territory of the first wave. It should be completed within the mentioned range. Then, breaking the previous peak of the gold market price and the formation of any kind of corrective pattern is necessary to expand the trend and reach the announced targets. Silver, similar to gold, is completing a third wave rally in a larger wave pattern. This could potentially lead to significant price changes. Now it is better to go to the silver chart using 4-hour intervals. It appears that the first and third waves are almost identical in size. It is possible that the fourth wave, which is expected to have ended in the form of a double zigzag, will lead to an extension in the bullish market, where the price will reach the 3 predicted targets. However, there is a possibility that the fourth wave will become more complex and potentially form a sideways pattern. Let's analyze the current situation in the cryptocurrency and Bitcoin market from November 2022. I am currently optimistic about the market's upward potential. The price action indicates that waves 1 and 3 are nearly equal, leading to the expansion of the fifth wave, which has formed a larger wave 1. This suggests the possibility of a third wave. For the second wave, I observe a double zigzag correction between the 38.2% and 50% retracement of the first wave. This corrective pattern might also extend to a triple zigzag pattern. Based on the current price action, it seems to indicate a diagonal leading pattern or a 1 and 2 and 1 and 2 pattern. We might witness the growth of the third wave at a similar level to the previous wave. To achieve these objectives, it's crucial to establish a suitable model for reform. Ethereum, often referred to as the second cryptocurrency, is believed to have started to rise before Bitcoin in June 2022. It largely followed a forward diagonal pattern. Ethereum's daily chart data shows strong growth after the completion of the diagonal pattern, which caused the expansion of the third wave to the same degree. The advance ratio of the third wave to the first wave was 123.6%. The fourth wave was a double zigzag pattern. Subsequently, the fifth wave became shorter and could not surpass the peak of the third wave, and finally formed the first wave in the degree of a larger wave. However, this is just my opinion. As for the second wave, it experienced a significant decline compared to Bitcoin. It appears to be completed as a simple zigzag. We should anticipate price action of either a 1 and 2 and 1 and 2 pattern or a leading diagonal pattern, especially in a bullish scenario. Otherwise, another bear market wave may be in store. Thank you for taking the time to watch the video and for the support from everyone who engages with us by commenting, sharing, and subscribing. Your support helps us create better content. Remember, the viewer is the main asset of every content creator. I hope you have a successful week in your trades and enjoy good health with your family members. It's your right to achieve success in the ups and downs of the financial markets. I invite you to explore the world of the Elliott Wave principle and benefit from all that I have learned and experienced at no cost to you. I'll be here to support you along the way. Good luck!